It's an important question, but let me just talk about my time with Vedanta. I've been now with Vedanta. My first time I started visiting the Vedanta operations to get to know the business was about July of 2013, so it's almost coming on 2 years. And I came here to India and Vedanta. I've been working in India for a good part of 10, 15 years in exploration as chief executive of a major mining company. And so I understood the challenges in India, but I also saw the opportunity. I saw the potential for growth. I saw the doubling of GDP. I saw the tripling, quadrupling of demand requirements. I see great resources in the ground, whether it's oil and gas or whether it's mining. So lots of potential, and there's a true need for a national champion like a Vedanta to come in here and really get some things kicked off. The extractive sector needs more capital. It needs more exploration. It needs more technology, best-of-class technology. The IT centers and the BPO structures in India do great R&D for mining companies outside India. Why aren't they doing it for mining companies inside India? So there's a huge opportunity for this. That's what attracted me to Vedanta. Now, I said as I came in as chief executive, I'd spend my first year focusing on those businesses that needed some attention, the ones that weren't pulling their weight, getting our aluminum production up, getting iron ore going, all the operational points. And that had progressed quite well. I mean, there's still things, there are going to be challenges, but I'm keeping the pace in the right direction. Now it's about listening to what our investors have been saying. Our investors have been saying, this is the right time to be simplifying the business, ready it for the next step. Create truly, as Anil Agarwal would say, that BHP of India, oil and gas mining, several verticals, each run by their own respective CEO, and they run and drive the growth of the business. Mayank is there for oil and gas. I've got a great CEO in aluminum. I've got a great CEO in iron ore, all these businesses, and they drive these businesses. And of course, for that, you need to have proper allocation of capital so that the best opportunities can be considered by the boards at that particular point in time. And then each of the CEOs are competing for that capital. They're looking for the best projects because they want to grow, and that's good for the country. That kind of competition, that kind of best practice corporate structure is, I think, going to be very, very useful to really take advantage of the potential resources for India. Now, could this have been done a year ago? Nobody was calling for it a year ago. They were calling for us to get this other stuff going. Now people are. So we're now in an environment, I said this back in March to our shareholders, that the next year of my tenure as CEO, I'm going to focus on that simplification agenda. So here we are.
All right, and for this to be successful, Mayank, of course, you will need the support of the minority shareholders of Cairn India. Do you think the sweetener that has come in the form of redeemable preferred shares, that is going to really strike the deal for you?
Yeah, well, I do think the process that we have used very good governance. You had the two boards that appointed independent evaluators. They're professionals in their field. They looked at the variety of valuation methodologies. And the board, I did speak with many of the board members, the independent board members, and they recognized fundamentally that Cairn has risk to a single commodity exposure. So they understand that the valuation, the governance process was quite well done, and I believe that the minority shareholders, when they look at the total package, they will understand the rationale for that. They will consider this to be very fair, and I do hope that they will vote for this in large numbers so that at the end of the day, we do have India's national resource champion, which would be by far the most diversified natural resource company in India, but also number 7 in the world. So scale matters, capacity matters, long life assets matter. So I'm pretty sure that when the minority shareholders look at it, they will see the compelling logic and the numbers.
Is this, Tom, a preemptive measure of adding a sweetener, or do you think that the concerned Cairn India shareholders really reached out after the media reports came in that this merger is about to happen?
I think that, again, as Mike said, this was done with the best of Indian and global governance and best practice. We had independent assessments of value were there, and we recognize that ultimately this is only going to happen if the majority of the minority vote. So what we presented is, I believe, a compelling, attractive opportunity for the shareholders. There's, again, 1-for-1 share. There's an additional component of value with the preference share. The Cairn shareholders will become a shareholder of Vedanta, so they'll get access to that diversified stream of earnings, not so much liable to swing on any individual commodity. So I think it's compelling for those shareholders shareholders. But again, that's part of our assessment, and that's what the boards had considered before they finally approved this.
Right. Mayank, how will you deal with this particular point? Right now, the crude oil prices aren't doing that well, but there is an understanding, at least most of the experts are estimating, the demand will pick up, shale gas producers will die down because of the high cost of production, and therefore the prices will return back. We have seen from 40 levels, they're coming to 60 levels. Now, how will you deal with a situation where you have assumed certain valuations for oil at this point to give a value to the Cairn India shareholders as part of the merger, but when you put it to voting, which is going to be only in Q4 of this financial year, by then if really there is a runaway price on crude oil, aren't they going to expect higher valuations?
What I would say is I have been in this business 38 years, and I've seen prices as low as $9 and $147. One thing I've learned is the herd is often wrong. So I'm comfortable that the strategic rationale for this deal is very good. I have no idea what the oil prices will be for sure in Q4. I do understand that the prices will oscillate, but fundamentally, I think the package is attractive to the shareholders, and they will participate in Vedanta, of which oil is a part of that as well. So I'm confident that fundamentally the strategic rationale and the numbers are good for the minority shareholders to be very keen on this.
And one more thing, how will you really pacify the shareholders who want to be in oil and gas pure play? They don't want a diversified outlook. They are going to take flight to other companies like Reliance Industries.
Yeah, perhaps. And, Reliance is more big on downstream rather than upstream. If you want to play in the upstream in India with a public company, you cannot not think of Cairn or Vedanta now, assuming this transaction will happen. So fundamentally, I think, if you want to play oil, if you want to play India, if you want to play natural resources in emerging market, at Cairn, we are doing some of the most sophisticated technology in Asia. It's not just best in India, it's in Asia. So I'm confident that fundamentally Vedanta will be strong, Cairn will be strong, and regardless what the commodity prices will do, with a good management team in both companies, with a long-term vision, we will ride out the storms and prosper quite well.
All right, you're confident of that, but Tom, tell us, how are you going to manage the cash? Now you are getting some surplus cash, which is on the books of Cairn India. You have a debt-laden company. Aluminium prices aren't doing well. Oil is in a downturn cycle right now. Bringing both together, where metal and mining is also weak and oil and gas is also weak, are you putting two really backward and non-operating businesses together to get a best strategic fit at the wrong time?
Let me first say that the balance sheet of Vedanta Limited is actually on a net debt basis. All the credit metrics is actually quite robust balance sheet. And if you look at our second half of last year, the results we just presented 2 months ago, during a period of all these volatile prices that you mentioned, oil being down, aluminum being weak or going down, other prices going up and down, the diversified nature of our portfolio allowed us to increase our dividend and allowed us to pay down debt without this transaction. And what we've said to the market is that in the coming fiscal year, and we're realistic about the volatility of prices going forward, we intend to continue to pay down the debt on our own Vedanta Limited. And again, that's what we're going to focus on. So, what we see is that this is about the best allocation of capital. And again, he has great opportunities. I meet with the team on a regular basis, and we hear about Palmer Hill, we hear about the deep gas, the Rajasthan prospects. As much appetite for those projects that he has, I want to be in a position to see that the company can keep those funding. And even this year, with weak oil prices and coming off the biggest capital program in the history of Cairn, we were generating positive cash from operations. And we intend to do the same with the aluminum business. Our zinc business is going great. I just want to say something about zinc, because if you talk to the analysts, about what is the only thing that people really like right now, they're really bullish right now, they say it's zinc, because they see supply coming off the market. The demand has been reasonably robust, and we have the lowest cost zinc asset in the world. We have the best, strongest zinc growth prospects, and we're the biggest zinc player. So this is not just a best of class asset, this is the best of class
Actually,
zinc asset in the company.
is doing very well, and what
Thank you for that, by the way.
most shareholders would like to know is when is finally HZL and Balco, which has been at the planning stage, and you've worked very hard with the government also on this. When is that really getting amalgamated into Vedanta Limited, because that is the final consolidation plan that you have?
We certainly would look forward to the government of India making its decision to disinvest. And again, it had been flagged a year. It had been flagged a year ago. That, the government had appointed valuers, and we understand a valuation had been taken, but a decision hasn't been taken. So, I look forward to the government making that decision. And certainly, I would expect, given the proper propensity of this government to conduct any transfer of public goods to the private sector through a transparent auction, we'd expect there to be an auction, and we'll be there.
Any timeline you have in mind with the way the government is responding at this point? To you, that when is this finally going to consummate?
I think this is not our timeline, this is the government's timeline. So from our perspective, we have to be flexible, we have to be ready, just like with the coal auctions, just like we hope to see some bauxite auctions. When the government makes those calls, we'll be there.
You did mention also, Tom, and this is one perception in the marketplace as well, that a lot of cash which is going to come in from Cairn India is going to also be utilized for paring down the debt, not just on Vedanta Limited, where you said that we are all right on our debt EBITDA levels, but on the other hand, you have Vedanta Resources PLC as well as a listed company, which is the holding company, which has given debt to a Twin Star Holding, which is a subsidiary of Vedanta Limited. Now, how much of this cash is expected to go in paring down the debt to the PLC company, and therefore they can utilize it for paring down their debt levels?
I think it's important again to emphasize that Vedanta Limited's overall balance sheet is quite robust. And again, I think as our CFO said yesterday, the intention is to continue to delever with, independent of this transaction, but also, as he said, that we already are in advanced plans to basically term out some of that debt over the next few years. So again, I can see these as being completely independent. It's going to take about 9 months for this transaction to take place.
Yes.
And then we'll look at what the best opportunities in terms of that allocation of capital will be based upon the boards of director at that time.
And one more final question on the capex opportunities. Where is most amount of capex going to go in the next couple of years, and this cash utilization apart from the debt? So how are you going to get a mix of deleveraging and also capital expenditure? If you could give me some sense of percentage between
the
that.
capital guidance that we've provided to the market so far is that the oil and gas business will be the largest spender of capital in the group over the next few years. And I would say that that's the same with or without this transaction. Again, if I look at the returns on our oil and gas business, I compare them to the returns that we'd expect from mineral assets. I just said that to your expo last week, that just deliver attractive projects, and you'll get the capital.
Right. Just fill the pipeline.
All right, so you're still focusing more on expansion rather than really paring down the debt, which is the perception.
I'm an optimist. I have a strong belief that the oil and gas resources will be needed for India's future growth story. And again, I see Vedanta rising to be not only a Indian national champion, but a global leader. And with it, taking the best practices for technology, human resource development. We have great people in the organization. We've looked at our brand. We've said, how do we actually focus the brand on where we want to be. Our business, whether it's oil and gas or mining, has to earn, and every single day re-earn that license to operate. So how do we handle sustainable development? How do we handle communities? How do we handle health and safety of our employees? That's all an equal part of it. It doesn't matter whether you're oil and gas, or you're in zinc mining, or you're in coal mining. These are very principles that commonly apply in India and the rest of the world.
And just one more thing, tax is an issue. Do you think the IT department is going to have an objection towards this particular merger?
I can't see why they would.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.